Thank you very much, Marty. Thanks for allowing us the opportunity to present.
We're going to switch to Jay Young. And Jay's a real interesting guy. Jay has a well-known podcast. He's written a book about mining and oil and gas and just investing in periods of distress. He's also a member of Tiger 21, so he's been a very successful entrepreneur, multi-generational family in the oil and gas industry. I'm sure I'm leaving lots out, but Jay's a real personable guy. He's going to be able to talk about all of this. So Jay, why don't you take it away?
Great. Hey, thank you very much. Thank you very much. I appreciate that. And I've got a lot of great people that have been around me, and I appreciate them helping me. And also, hey, I appreciate being here today. There's a lot of great people I see on the screen, and we look forward to it. So just to kind of start off and talking about, what I do and yes, I do have a podcast. I love podcasts. I love to. One of my biggest. What I want to do is when I was in high school and college, I didn't have a good mentor. I didn't have somebody that was telling me a guideline of how do you be successful. So it's taken me longer, I feel, to get on the right track. So what I like to do is I like to interview successful entrepreneurs, people that have made good decisions. What did they do? How they do it? And I can put that on the podcast. And I've got multi-millionaires, billionaires, and everybody that I've interviewed. I really look forward to that, and that's just kind of a side gig for me that I really enjoy doing. So, but I wrote a book about the upside of oil and gas investing, and there's right behind me there. You can see that, and it's really it was great because there's a lot of different people that invest in oil and gas because it's 100% write-off. But they're investing in the wrong type of project. The model's different. The model's not good. People invest and they don't get their money back, but they go, well, I got some money back. I got a write-off. So, but I wrote a book about it, and I'm excited about that. So, but I wrote the book after I was on a chairlift with a friend of mine and was in the apartment business, and about 5 years ago here in Dallas, and you know how that's been the last 5 years. He's killed it in Dallas, Fort Worth, Houston, Phoenix, San Antonio, man. Anybody in apartments has done a really great job. So we classified our oil and gas investing just like apartments. What's the exit? What's the scalability? What's the exit? What are you in it for? So, first of all, thank you for allowing me to be here. My family has been in the business for over 100 years, which is pretty neat because when we're talking about, going to Thanksgiving and to family reunions, I mean, my great grandfather, A.K. Turner, A.K. had 12 kids, my grandmother being the oldest. And, if you're a man, you're in the oil business. And if you're a woman, you're married to somebody in the oil business. So we know the oil business. I mean, that's what we talk about, wells and pumping units and downhole pumps and rods. And how do you make a well produce more, less? What is, the whole thing? So it's kind of a really incredible, upbringing that I had in Texas, and so obviously a lot of people don't know anything about that. They don't know anything about the oil and gas business. So I've been asked to go on Bloomberg and a lot of different places to just talk about the oil business and give people an idea of, hey, it's 100% write-off. But there's also a great way for you to make money. Look at our model and how we do it. Okay, so, but today we started King Operating 1996. As I mentioned, I got out of school in 85. Oil prices were not great at that time, but, we finally got in the oil business, and I worked for another company for a while and then started King Operating in 96. Started a marketing company for oil and gas projects in 95. So I've been an entrepreneur for, 25 years now. Been in the oil and gas business for 30. I did the stock market a few years before that. So one of the things that, when you talk about King Operating, we have the assets. So we own the assets and the investor owns the assets, which is the most important. You don't just own a one well project. You own the assets, and then we grow the assets like an apartment complex. like me and Michael Berwick, my friend there, buying a business. You know, we buy a business and then we increase the value and then we look to scale it and sell it. You know, we scale it and sell it. You know, that's our model. So that's what we do. Now, we're going to talk about alternative investments and the different types.
Hi, Jay. There was an echo. I turned off one of your speakers.
Okay. Can you hear me now?
It's great.
Yeah. I've never had this problem before. Echoing like this.
Yeah.
Marty, can you see the screen? Marty.
Are we better? Are you see the screen okay?
I can hear you.
You can or can't?
I hear you fine. Back down where this echo is coming from. So just keep on speaking.
Marty.
Keep on going, Jay.
Okay, are we good? Good, okay. We'll talk first about alternative investments because, you know, somebody can obviously have a great stock portfolio, but what we're looking at is we're looking for, you know, what do people look for in an oil and gas investment or an alternative investment?
Jesus, thank you, Father.
And an alternative investment is real estate, it's energy, it is precious metals, things that you have to, that's outside of your stock portfolio or basically cash, you know, so it's an investment that you've made. And, you know, venture capital, collectibles, things of that nature. If you look at the next slide, why should you do, you know, why should you have some alternative investments in your portfolio? You know, well, portfolio diversification. Like right now, there's been a lot of people, me included, that have made a really good amount of money in the market in the past, you know, 6 months. Well, is it going to continue on? You know, we look at it, obviously, oil and gas as there's 3 different types of investments. And I know the guys that talked earlier about gold mining, I'm sorry, we'll talk about gold mining too. We need to have gold mining stocks. We need to have oil and gas. We need to have the stock market, and we need to have real estate in our portfolios. All of us need to have these great assets in here because, man, this is the way that you diversify, and you at the end of the day, at the end of the year, what is it that you want out of your investments, and how can you make money on the long term? You don't want to be all in the stock market and invest in, you know, unless you invested in Apple or Amazon a long time ago and that was the only stock you had. Man, you got really, really lucky. Now's a great time to look at how can we look at a sell and then put into something else. You know, and I was talking to somebody not long ago, and I said, you know, this may be one of our projects about what is it that we can do. You know, somebody that is the way of the future. Alternative investments is the way of the future. Why? Because, you know, you don't want to be only in one area. You know, and it's like the stock market, like it. Also the tax advantages. You know, there's a great tax advantages in oil and gas. Do you do it for that? No. Give the money to charity. There's a lot of great charity. 22 Kill. We raise tons of money for 22 Kill. 22 veterans a year, you know, commit suicide. I donate all my proceeds of my book to 22 Kill. That's great. Let's give the money. We're not talking about only tax benefits. We're talking about, you know, you need the tax write-off and you want to make money. That's what the Joneses and the Hunts do. Okay. Now also too, you want to have multiple exits. You know, I don't think oil and gas is going to be here for the next 20, 30 years. It's going to be here. What's the price going to be? I don't know. Do I care? No. Do I care what it's going to be next year? Yes. The next year, yes. After that, I don't know. And if oil prices go to $100, $200 a barrel, we're not there. You know, we're not investing at $100 a barrel. You invest in real estate or the stock market or whatever else is down at that point. Now is the best time to invest in oil and gas because of that. Prices are low. Rig count's down. We're going to talk about that in just a minute. Okay? Why is now the best time to look at this? Trade-offs to alternative investments, longer hold periods, lack of liquidity, and it's also cyclical. Cycles are the best thing going right now in oil and gas. Buy low, sell high. Current market factors. I wrote this article in Forbes not long ago, and I wrote an article too about the price of oil with the pandemic. March 22nd, I wrote an article and I said, hey guys, oil is going to be at $65 a barrel at the end of this year, and the price was negative. You know, I have all the great timing in the world, my wife says, but no. But I'm just saying that the time is right. The time is now. Why? Rig count. There's 3 factors that tell you what's going to happen. Somebody told me this. They said, hey, what is the best cure for low oil prices? Low oil prices. What is the best cure for low oil prices? That is low oil prices. When prices go down, the capital's vanished. I read an article last night in London Times that talked about, man, the capital's gone. Nobody's putting money to work in the fields. Look at the rig count. Rig count's going down. There's nobody drilling. This rig count, look at that. This rig count is in about 2,000 rigs, you know, at one time, and now it's down to 176. There's not, and only like 150 are drilling horizontal wells. A lot of them are drilling verticals. How did we go from 5 million barrels a day in the United States to 13 million barrels of oil in a short amount of time? Think about that. Less than 10 years, probably about 8 years, we went from 5 million barrels of oil a day, U.S. total oil and gas production in the United States, to 13. Now we're at 10, going down. Rig count's down. People shutting off wells is down. I'm talking about the supply right now. The supply is going down, and what happens? The supply goes down because you have less rigs working on the wells. Your shale wells that you had at one time that got us from 5 to 13 million barrels a day, that has declined rapidly. They decline. So you're going to see a shortage of supply. When our demand comes back, which it will, and even if it gets back to 90, 95%, I know it's not going to be what's the world look like in 6 months or a year, 2 years. But when it gets back, it's starting to come back, our demand's there, we are not going to have the supply. What's going to happen when we don't have the supply? Prices go up. Always happens, price goes up. Okay? I mean, this is what happens. Russia, Saudi Arabia come back in March, February, go, we're going to dump all this oil in the market in the United States. We're going to drive the price down because we're going to bankrupt all these oil and gas companies that are drilling these shale wells. They did. What happened? Price goes down.
Hey, Jay, can you hear me? Jay?
Yes. Yes.
So just real quick. So, oil, natural gas, price is low, development is being reduced. I think several companies have gone bankrupt and their assets are for sale. And you're right. It seems like it's almost always the case that oil jumps back up. Something happens in the Middle East. There's some kind of volatility that occurs. Something happens in Venezuela, et cetera, price goes up. So you don't see any of these efforts in places like California that are moving to, renewables. They're not going to impact the need for oil at all, you think, in the short term?
Not in the short term. Yeah, exactly. You will see it in 2040, 50, you will see this, but not in the short term. We're going to need oil in the short term.
Okay, so secondly, renewables won't impact short-term oil utilization, but so we've been living through a deflationary cycle for a pretty long time, I think, in terms of some generic things that we use. but I think that we're heading towards an inflationary cycle. I think people before said that, and I think that's just going to be the case, right? So how does oil act in an inflationary cycle?
It's going to go up. I mean, because you're going to have a lot more people, the demand. So it's all about supply and demand. And that's exactly what happens on the price of anything, obviously, is supply and demand. And what's going to happen when the demand goes up and that you need more oil and you don't have it, then people are going to reach and go, man, I want to pay for it. I want to pay $60 or $80 a barrel. Or that's why Goldman Sachs has said, you know, it's going to go to $60, $75. You have JP Morgan, who said at one time the price is going to go negative, and it did. JP Morgan is saying that in 5 years, well, about 4 years now, it's going to be at $195 a barrel. 195. And I mean, assets are going to be unbelievable at that price. And that's what we're doing, is we're putting ourselves in a position today to take advantage of that, drill wells, increase the value, and oil prices go up. It's just, I mean, lining all the moons up, which is beautiful.
Okay, great. Keep on going.
All right. But so anyway, what is the difference between, I appreciate the questions. And I know that some people are asking me on my chat about that. And please ask me questions. And so I'll answer any questions. I love this business. This is the best time. And in 3 years from now, you're going to be looking at Jay Young going, Jay, what's going on? I'm going to go, man, we can't buy any assets at a great price. So we're on the sidelines. If oil does go to 100 to 120, it's hard to make money. At $40 a barrel, wow. I mean, our asset, we show that you know, it's $40 a barrel and it's a break even at 20, and at 40 it's a 2x. That's where you make money in this market. You know, is buying low, selling high. Let's talk about the why King is different, or how King is different. And it talks about, you know, acquire, develop, and divest. And this is ADD, not your Adderall type of ADD, but you know, it is about acquire, develop, and divest. Look for assets that you can increase the value in a short amount of time by drilling wells in a proven oil field, and develop the oil field. We did this before and took a 400% return in a year. We sold a third of the asset, gave clients back 130%. Go to the website and I'll send you a newsletter and let you know how that worked out. You know, and that's what we plan to do now. You know, so acquire, develop, but the most important is divest. I want to get you income, but I also want to divest the asset. Once you divest the asset, you're giving people back money. That's what they want. I'd love to give you back all your money plus, and then continue sending you a revenue stream. So you can obviously, you know, have a check every month. You know, I still like to get royalty checks of the month and give them to my wife. You know why? Because, well, number one, it's just fun. Do they have the electronic transfer or whatever you call that deal? Yeah, but do I like it? No. I like to get the check and hand it to her. So it's always fun. All right, scalability. We lease enough land. This is the model that we take. That's a private equity model. It's the big boys game. Investors like you and me and all that can't get involved in this. We have a lot of money in this. We're excited about this prospect. We're excited about this project, but you can't get involved in a private equity deal. That's for pensions. And so what we did is we scaled it down and said, okay, how can we get investors at $100,000, $200,000 or $500,000? How can we get them involved in oil and gas? And so all we did was, it cost me millions of dollars of my own money to put this project together because I had to go buy the leases and so forth. But I was in there doing this. And that's why I'm saying that you lease enough oil and gas mineral acreage to drill up to 200 wells. You do that first. And then what do? You use equity to go drill and complete wells and get it up to the next level. At the next level, you either decide, oh, we're gonna divest all of it, or we're gonna divest some of it. So at that time, you drill it with enough wells. And I love drilling wells. We'll be on a rig this year. Come out with us and go to the wells. It's a lot of fun. Monthly income. You know, we send out monthly income to our investors. They love that monthly income. And you don't have to get a check. I'm just kidding. You can get it transferred to you. And we'll send you a statement. Exit strategy. How do you make money in oil and gas? Exit strategy. Don't scale it and don't sell it. Scale it and sell it. I got that patented, so don't try to steal it. I got it patented. Scale it and sell it. Traditional oil and gas prospect, you have one location only. It costs you $1 million to go drill a well. I did this for years. If it's $1 million to go drill a well, everybody pitches in 100 grand, you own 10%. When the well's dry, you're dry. I mean, that's it, done. That's not how you make money in oil and gas. You do it by, we seek opportunities to drill minimum of 60 locations. You drill 20 of them, and then you have 2 offsetting locations, and then you scale it, and then, you look to sell it.
Hey, Jay, real quick question. I mean,
Yeah.
So one of the things about our group is that we like the authentic thing. And since you're from Texas and you're authentic, can you talk about the tax repercussions as well as for the investment purposes?
Yeah, right. So it's 100% write-off. It's a write-off against your adjusted gross income. And now you'll probably get 70, 80% the first year, something like that. But it's 100% write-off. So it lowers your tax basis. We put in $600,000 on a Permian deal this year, myself personally, my family, because we wanted to invest in it, but not only because we wanted the income and we see the asset grow and sell, but we also love the write-off. We have millions of dollars in this project. It's adjusted gross income write-off, so you don't have to pay as much in taxes. So at the end of the year, when somebody, that CPA, I don't know what your deal is and how he calls you or tells you what the deal is does he call you and go, okay, well, $200,000, or does he send you smoke signals? Like my wife, that's what we like to do to my wife, send her smoke signals and be somewhere else.
Yeah.
He tells you, hey,
Put it
you know
on in
what?
the other room.
I owe less money because I did something with King. People in California, people in Boston, people in New York, you're paying 50, 60% taxes. You love the write-off, don't you? We love the write-off. Okay. We have self-directed IRAs, people that invest through the qualified funds. We have a 1031 project right now that you can participate in on the 1031. You can 1031 exchange this. Mario Gallo, yeah, thanks Mario. We can do a 1031 exchange with this. So if you're looking to diversify out of real estate, you have 30, 40 people, or let's say you have 30, 40%, you're identifying 2, 3 properties. Look at doing 20, 30% in oil and gas, 10 to 20% in oil and gas. Don't do it all. You love real estate. You've been doing real estate. But who's going to come back to the buildings and all these buildings out here, and how's commercial real estate going to do? How's apartments going to do when commercial real estate isn't doing that great either? Is it really? So diversify into oil and gas. Don't do it 2, 3 years from now. Do it today. Why today? Because today's the right day with oil and gas prices being where it is. If you're not going to invest with me, great. Find a good deal. Find a good model. Find somebody that's going to treat you right. Authentic. Am I authentic? Yes, I am authentic. We'll take you to the oil field. You have to wear boots. You have to wear cowboy boots. You have to wear a hat. No, you have to wear a hat. But I'd love for you to wear a hat. We'll stop by the store on the way. I want you to see drilling projects. I want you to see what's going on with oil and gas right now. It's the right time to do oil and gas. You can invest in our project through, qualified funds. If you do it through your self-directed IRA, you can do it through a 1031 and do that 1031 exchange. We have that because of the minerals. We used to do this in royalties a long time ago. I used to love to do royalties because it's a good sense of income, monthly income to investors. The problem with it is it didn't make money. It does not make money. And I did not want to do royalties and 1031s. I love doing this because we're going to scale it. Let me tell you one thing real quick. And I'm trying to say, let's just say this isn't my prospect. Let's say this is somebody else's prospect, that you're going to increase value. You don't care what the price is until you sell. I've got a project that I know of right now, and you can call me and I'll tell you where it is, that if the price of oil is at $40 a barrel, it's a 200% return next year. If it's at 100, it's like a 500% return of 5X. You don't care what the price is until you sell. I don't turn on the TV and look at it less than 12 times a day. I used to do it 30. No, I'm just kidding. But I'm just saying that you don't look at the price of oil now. I don't care. Because what I do care is when I go get the evaluation after I drill these wells, and at that point is when I care about the price of oil. Why do I care now? I don't. I'm trying to get as much money in the bank as possible to go drill and complete these wells and get everything going, increase the value as much as I can by drilling wells. I don't care what the price is until the end of next year. At the end of next year, when I go sell, that's when I care. That's like a real estate deal. I sold this building. Somebody offered me $100 a square foot for it. I said, no, it's not enough. I want 200. Well, I know that at $200 a square foot, this building at 20,000 square feet is worth $4 million. I bought it 100. I sold it at 170.
But Jay, okay, so your exit strategy is 1 to 3 years, though.
Yes,
I know you're saying, hey, don't mind if you're in the money or not at this point, but it's still a short enough time frame. It's 36 months.
Exactly. I'm looking at it by the end of next year by increasing the value by drilling 17 wells and exiting. It's a really easy project. You put it in, you buy the leases, you drill the wells, increase the value. We did this in 2015, increase value 400% a year. I want to do it. I want to do bigger than that. But also, I mean, I hope that makes sense that, you know, it's all about the price of oil at the time you sell. I mean, if the price is at 40, we may sell some of it, get some money back for investors. But if it goes to $60, $80, whatever you think the price of oil is, and if you're bullish, like I am about the price of oil, you're probably not as bullish as I am. But I'm just saying that if you're bullish about the price of oil at the end of next year, when you sell, that's when you sell the building when it's completely full and everybody around you. When Amazon comes in, that's when you sell your building. You know, it's
Hey,
empty.
Jay, real quick question. Do you have any data on utilization of oil and natural gas, like how it's utilized, what it's spent on? Like is oil and natural gas, 30% of U.S. like energy, 95% of auto? Like, do you have any breakdowns on that?
I do. I'd love to send that to you.
Can you just talk around it if you don't have it in detail?
Yeah, I don't know off the top of my head. I know like 65% is gasoline in cars. 10 to 12 is like jet fuel. You have cosmetics, you have plastics, you have a lot of different. Also, I mean, there's so many different things that oil is used for. It's not just transportation, but that is a large part of it. And that's why when jet airplanes went down, and when you weren't driving to work as much at that time, the demand went down. But you didn't see the demand go down 70% or 80%. I mean, you went around the world, it went down 10%. The demand went down only about 10. Well, it went down before the first couple of weeks, it went down a lot more. I'm sorry. Now it's at about 10%. We're not 100% people. I mean, I've talked to people that work for these big corporations, and they're saying, yeah, we're going to back to work at the end of September or October or November. Well, everybody's not at work yet. Everybody's not using those cars. And I don't think they're going to be jumping on the subway anytime soon. And I would hate to be in New York and have to have the subway as my primary mode of transportation. I mean, just think about that. You'd be in plastic gloves and plastic anything and everything. I'd be driving my car anywhere and everywhere. The more people that drive cars, the consumption in the supply is not going to be there. Don't forget, I mean, the demand is one thing, but don't forget, what's the big driving force behind oil wells? That is drilling new wells. And if you're not drilling for new oil, the supply is going down. We went from over 13,100,000 barrels a day. We need 22 million a day. The United States, we needed, before COVID, we needed 22 million barrels of oil a day. We need about 21 million right now. We're down a little bit in what we need in our demand. So our supply right now is going from 13 million down below 10. I believe it's going to 8. I believe it's going to go to 7 or 8 million. I know there's a lot of people out there like me that think the same thing, that when you have that discrepancy and you have that alpha, between the two, and you're like going, oh my gosh, we need 12 million barrels of oil a day. We need to have our refineries full. If we produce 22 million barrels a day in the United States, we couldn't refine it all. We do need foreign oil. The question is, how dependent are we on foreign oil? And we want to be less dependent on foreign oil. How do we do that? By making good relationships and not having them dump all this oil in the market, which is kind of ridiculous in my opinion. And I have a lot more opinions about that, which you can email me and we'll have that conversation. But I'm just saying that We need 22 million barrels a day in the United States. We only produce less than 10 million. We need 22. We're producing less than 10. It's going down because of rig count, because of wells turned off, because shale wells decline in value. The private equity companies, all the oil and gas companies, hundreds of billions of dollars have gone into increase our U.S. production from 5 million a day to 13 million a day before the pandemic. It's no longer there. Rig count's way down, and when you're not drilling for it, I'm talking about you're drilling 5%, 10% of what you were drilling a year ago, 2 years ago. Rig count is down that much. Look at it. Look at the number, 1,700 rigs to 200 rigs. I mean, that's a lot. And when you're not drilling and producing it and replacing it, it's going down. Wells decline in value in production. Wells decline in production. Don't forget that. When wells decline in production, it's not there. When you need the oil, when the supply is not there, demand and the demand's there, it's going to be an anomaly. You're going to go, oh my gosh, where is this oil? It's not here. Well, I need to pay more for it, and it's not going to be there. That's why I'm saying, I said it in Forbes, March 22nd, look it up, J.R. Young, Forbes, $65, because we're not going to have the oil. When the oil's not there, prices are going to go up. Do I care if it's going to go up to 65 now or next year? No, I'm not selling assets right now. You know, it's kind of funny when you're talking to people and they go, well, hey, man, your asset's not worth very much money right now. It's $37 a barrel, $38 a barrel. And I said, well, hey, you know what? I'm not selling anything right now either, you know. I'm not selling my building when it's at $100 a square foot. Hey, it goes to 200, I'm all in. The same thing's going to happen to gas. You're going to see our demand going up, staying there, going up. You're going to see our supply is going way down. When our supply goes down, you're going to see we're going to need it, and we're not going to have it, which raises the price. Marty, I'm sorry.
Jay. Well, listen,
I can talk about this all day long. I'm excited.
I'm excited too. I think this, and by the way, we love Texas. I was in Austin back in July, and right behind us was the Google building that they're putting up, and then there's an Apple building, and I guess they're opening up a Tesla factory there. So Austin may be the first place in Texas to embrace renewable, but I still think it's fantastic. So great job again.
Thank you very much.
And